You're right, we are ending into uncharted territories, especially with US markets at all-time highs and emerging markets obviously not doing so well, and the rise of protectionism across the world. So we are entering into a period where there's a lot of uncertainty ahead, and I think the risk more is for investors investing in the US markets than in emerging markets, because emerging markets have already corrected to some extent. Valuations are not at all at frothy levels anymore. And in fact, if you compare all the markets, emerging markets are relatively more attractively valued. So the risks to emerging markets have reduced. So in terms of the downside, I think there's more downside to investors investing in the US markets. I think even for India, we are entering into some period of uncertainty as elections are around the corner. You know, in less than a year, we're going to have a new government in place. Hopefully, it'll be the current government and all the policies that they put in place continue. But there's always a risk that things might change. In this kind of an environment, one has to be a little bit more cautious. I think SIPs are a good way to keep averaging into your portfolios, and I think that's what we are seeing most investors do because that reduces and smoothens out the volatility for investors. So volatility has already risen in financial markets this year, and I think we're going to continue to see increased volatility. And we're already seeing that because of statements made by certain political leaders across the world, including President Trump in China. So their statements themselves and what that means for financial markets long term creates a lot of uncertainty and therefore the volatility. And when market valuations are where they are, any bit of negative news creates risk and worries about risk, but then any positive news, the momentum is so strong that any positive news also continues the momentum. So therefore, I think the volatility is likely to remain high over the next 12 months. I wouldn't necessarily say take a whole lot of cash in your portfolios because, as I said, it's where if the election outcome is favorable, before you know, the markets will start trending up again, and you don't want to be out of the markets. So I think market timing isn't a great strategy long term. So I think SIPs is probably what investors should do. But in general, I think one has to be a little bit more cautious. There is a lot of value that is emerged across certain mid-cap companies, and so you can actually do bargain hunting as well in this environment. So for long-term investors who want to be exposed to some quality mid-cap names, companies that could have high growth, this is potentially a good time as well.